Ladies and gentlemen, welcome to the SoFi Weekly Podcast. Today, Tevis, honestly, it's funny. Everyone made it on time, but it was extremely close. But Tevis, I just wanted to mention, you're in South America right now?
No, I'm in Florida.
Oh, okay. You're in Southern America. Sure.
Yeah.
So he has about a 2-second delay. So we apologize if there's any sort of talking over each other or anything like that. But his connection's doing really well right now. Let's see how it holds up.
The 2-second delay is with lowering my video quality, turning off every other device in the house, and turning off every other tab other than this tab. So fingers crossed.
Yeah, you were doing a lot better backstage, by the way, already. So how's everybody doing?
Good.
Yeah, Steve?
Well, I got a phone call from Captain Clickbait over here, 30 seconds before 9:59, like I wasn't going to show up or something.
Wait, who are you talking about? I didn't text you.
Yeah. See, you just admitted you're Captain Clickbait. I love it.
I thought that's who I thought you were talking about. I'll take that claim to fame.
With titles like SoFi, it's just bad. SoFi got worse. SoFi, bad rumor. SoFi, capital constraint. Captain Clickbait over here.
I got the most views. What can I say? It's not about it's just a title. It's like naming a book. It's the content inside that matters that I try to keep. I'll be as clickbaity till the end of time. It gets people on the platform.
So clearly Steve has never seen one of my videos because I literally posted a video earlier today and the thumbnail has Anthony Noto behind literal jail bars.
Why would you do such a thing?
Because they got fined for like $600K.
Yeah, I'm pretty sure you do it too, Stephen. I've seen some articles, and
sometimes I don't even pick the title, so keep that in mind.
Fair enough. So do we want to jump right into a fine, a SoFi fine?
Sure.
SoFi just got fined. What was it, on Wednesday? Or at least it came public on Wednesday, that they received a $500,000 fine plus $200,000 to be paid back due to a share lending, essentially no real supervision for their shared lending program, which essentially might have been, they're calling it misleading. I think it's like oversimplification or harsh terminology. They just essentially didn't have the best procedures in place to make sure that people understood what they were signing up for. Did I put that into good perspective?
It's not just SoFi. It's 3 other companies that are grouped with SoFi that are sharing a $2.6 million fine across the 4 of them. That's not even... that's popular. That's M1 Finance, Public, and Sogo Trade are the 3 other companies. So this is not just SoFi out in left field doing something shady. This is something that all of these companies are jointly sharing. And the payment, I believe, if I'm not mistaken, was without acknowledging any their right or their wrong. It was just like, hey, let's pay this amount to clear that up.
I think even in, I'm not in this exact industry, but being sort of around this and in the financial space, that there are a couple guidelines I find that are not exact, check boxes. Like one of them that I've always kind of disliked, or at least just as an advisor, is they say, keep good notes on your clients. Well, what the heck does that mean? So essentially it's just defaulted to write down everything that was said back and forth without missing anything. And so Zoom transcripts or something like this has been a good help. But
well, the funny part I found, I think Stockgoat tweeted about this, saying basically over the period of time that SoFi was fined for 2019 through 2022, something like that, their securities exchange made $8 million and they were fined something like 700K. Like, now you understand why all these, other institutions in the banking industry play in that gray area, just because like they made 8 million, they got fined 700K. Obviously it's not a huge deal.
So I saw that tweet as well. The only problem is that was revenue. So that doesn't also account for the cost to run the technology or any sort of other fees that might have been accrued. Just looking at that one cost in the revenue, I didn't think was fair enough. But yes, you're right. Like it's definitely a small price to pay, right? Jesse Dow alone will probably make 700,000 this week, let alone how much SoFi is going to make. It's not a problem, but some people were worried that this kind of digs into the thesis of like getting your money right. You're misleading investors. I think it's an oversimplification. It's more just the procedures on the back end were not that great. But yeah, compliance issues will be there constantly. At least I think. Roy?
Yeah, this is that's the only hit, is reputation hit, and it's anyone that actually knows anything about this space, they'll look at that and be like, yeah, it's really a nothing. It doesn't mean they were doing anything shady. They weren't. They just needed to tighten up the standards a little bit, and that happens. That happens actually constantly with most of these companies. Bears will use it anyway, but something like this is very short-lived in a news cycle. It's already ancient history.
Right. Yeah, I mean, if we remember back whenever SoFi got into some hot water, or at least I thought it was hot water, a reputational hit for student loans because they went after those, what was it? They were, I'm going to forget, they sued the Department of Education because of the moratorium pushing over. And so people thought, okay, students got upset. They sent angry letters and all these things. Now it's kind of completely blown over. No one really remembers that. At least that's the way I see it. At least I will assume I'll push the question off to you guys. Do you think that this will get pushed over really quick?
It's over.
Yeah. Do you think investors alone even cared?
No. It one day hit.
Sorry, I said investors. I meant customers, like the on the invest platform.
No, nobody knows about it. Nobody cares. Investors are even over it. It's done.
Gotcha. Tevis?
Yeah, I agree with Roy. Like, if you're using Venmo just as an example, and Venmo gets hit with something inconsequential to like, as a user, are you reading into the company's FINRA or SEC filings and saying, oh, like they did something unethical? Like, there's a massive disconnect, I feel, from the user base that uses that product and the investors, and then a couple of degrees, orders of magnitude to us who micro analyze every little shred of SoFi news. I think so. Chris Hager posted about this news on X, and somebody commented around the reputational hit, and he basically responded saying, well, SoFi was also in hot water with the SEC in 2021, basically a copy paste type of situation, except instead of FINRA, it was as SEC. Do you guys still remember anything? And the fact of the matter is that these things are so technical sometimes that they often just fade away immediately. And the thing is that so I made a video earlier today, and I compared it with the crypto thing where they removed the crypto because it was such an inconsequential hit to their revenue. And I think the stock will tell the tale from an investor perspective, even like if the stock doesn't even take a hit, right? Then I don't like, I would expect it to take a hit at that level, let alone what the users think, where they're like on the other side of the spectrum in terms of their awareness around this news specifically.
So I wanted to just take a guess. Was the SEC trouble that they got into, was that regarding their crypto direct deposit thing? Is that the one that he was referring to?
I think so. This was in 2021.
Okay. Because I know that there was some SEC trouble, or Sherrod Brown or whatever his name was going after SoFi because they said they wouldn't add any new features to their crypto product line, and then they offered people, if they were to put recurring buys for Bitcoin, that they would be at no gas fees or any sort of charges, which they assumed was a new thing. Then they deactivated that, and then they deactivated crypto in full just a couple of years later. Okay. That being said, do we want to pop on over, because I'd really love to get Steven's opinion on this, because this is something that he really wanted to talk about, and I don't know, I haven't heard much from him since. Is the Q&A, Steve? What did you think?
It was a waste of time.
Oh, no. You didn't take anything from it? You didn't like any of the comments?
It was a waste of time because bad questions got upvoted.
Yeah.
Like, that's my problem with it. You have Noto taking time out of his day, Lapointe taking time out of his day. You have the executive team taking time out of their day, and stupid questions get upvoted. It's ridiculous.
Do you think that would happen at any companies?
Probably.
Sorry?
Probably.
Yeah.
Never.
I can't see it not happening. Look, asking about a dividend when they have consistently stated their point on that is a waste of a question where you could get real answers on something else. Asking if they're going to be profitable when they have not changed their stance on when they're going to be profitable is a waste of their time. Ask good questions. And I really wish they used a different platform, because some people, such as myself, are not comfortable linking an account with an additional service, because that's just one more place that has my information. I want the least amount of places having my information as possible. And, there are real questions that would have been very insightful that they could have went into. Instead, it seemed like they were annoyed at some of them and just passed over them. Rightfully so. I'd be annoyed too, because anybody can read an article, listen to the conference call, and get pretty much all the information from what they were asking. It was just annoying. At least Chris's question got upvoted. Thank God.
Go ahead, Roy.
Well, they didn't even answer Chris's question like in that much detail even. And maybe Tanner, you can jump in on that. But just to piggyback on your comment, Steve, I think any small cap stock is going to be like that when they open it up to retail, because we might have a very, very like single digit percentage of retail investors who are as informed, let's say, as people who are listening to us right now and have been consistent listeners of SoFi Weekly. But the remaining retail investors are like, one moon. Regardless of that, I think Anthony Noto and Chris Lapointe, they answered the questions, they repeated themselves a bunch of times, but they also added really helpful context in the form of reiterating some key points. They reiterated GAAP profitability on a forward basis. So going forward, the expectation is GAAP profitability. They reiterated the revenue split being closer to 30-30-30. They reiterated the tech platform having higher margins in the new year. They reiterated the one-stop shop aspect, right, of saying, hey, home loans, as an example, it's used to build trust. Trust leads to higher lifetime value. Higher lifetime value leads to better rates. It is a virtuous cycle in terms of how we do business. And those lower rates allow us to give more back to the consumer. And as a result of that, we form a moat that legacy institutions don't have. And so they reiterated so many different points. 1 million plus members per quarter in 2025. All of these things, I think, serve as reinforcement for more retail investors to band behind, because I guarantee you the people who ask those questions might not even have been listening to that session to understand, okay, here's really the moat, because they can find it in all these other mediums. But the people who actually do their due diligence on SoFi will be listening for those nuggets of information and will be leveraging them to make forecasts going forward.
We should get Chris and some other people. We should make a top 10 list of questions, and whoever is a paying member of X, or I'll even pay so I can create a longer post, and we'll just tweet it to Noto and Lapointe and SoFi and say, because of the terrible questions, we apologize on the behalf of stupid people. And no, because you know what? It's not fair that people upvoted when you're going to pay a dividend. It's ridiculous. And we should ask the real questions that can help get better clarity on what their mindset is, what they're looking to put on the roadmap, and what is actually useful information to help get them to NODO's goal of a top 10 financial institution. Not none. Most of those questions did nothing to help answer that very important question. And that's what I'm angry about it. Like, guys, don't upvote. When you're going to be gap profitable, they're going to be gap profitable in a month. Because if they weren't, they would have issued guidance and they would have guided down for the quarter. Like, don't
can I
ask
butt in
when
really
they're going to
quick?
provide a dividend. Like, that's not happening for a very long time.
I didn't want to cut you off. I did just want to catch. I saw a comment in here that I wanted to get to. I'm not going to highlight it, but I did see Danny Deals in the chat. Danny, if you want to come on the SoFi Weekly, we'd love to have you. I did just send you an email with the link to join in if you're available. If not, no worries. But did send it in. Sorry,
who is this?
It's another content creator. What?
He's the guy that called us turds on his video.
No, it wasn't
talking about?
turds. It was something else.
I have no idea what you guys are talking about.
Oh, I can't say that on camera.
I just said it. So, regardless, anyway, he's just someone that covers SoFi. Get extra insight on the Q&A. That being said, it's sent out regardless. What did you guys think? Like what Tevis said, reiterating some of the things that had already been said. Yes, the dividend questions were not great. I think management did well in answering questions in a better way than even they were phrased, right? Some people said, when's profitability next? And then they went on to talk about capital constraints. So it's better than just saying, hey, we're expecting it this quarter, right? And then moving on. But go ahead.
I was going to say they actually welcome questions like that. Like every company gets questions. We already mentioned that. When they get a nice softball like that, where they get to talk about some of their best points and highlights, they want that question actually. And it, I mean, SoFi wouldn't need to do this just because of the way retail is, but like if they could like push people to upvote it, they absolutely would. Just because some people aren't paying attention, and even if they are, it always is great to just reiterate and be like, hey, we're winning. Quarter 4, gap profitable, we got this. And there's 2 ways that they can handle it. They chose the rephrase a question and reformat it and give some extra additional information on it so people understand like nothing has changed. Capital constraints have not made an impact on that. Or they could just do the highlight reel, like, okay, real quick, we've got the question. Yeah, we're going to do gap profitability. No dividends anytime soon. That's something we'll look at in the future. We're a one-stop shop. Now let's look at some other questions we'll go into more detail on. So either way, those they may be a waste of our time, but not everybody is us. And there's things that I never mind hearing a company that I'm investing in reiterating again and again is like, yes, we're on track. Quarter 4, gap profitability, book it. I'm like, you cannot tell me that too much. That should be my ringtone, in fact. I'm okay with that. Just hearing it again and again. So not a waste of time.
Every time you get a text, it's just, we will be profitable in Q4. Yes. 2023, next quarter. But yeah, and even some things they even not only reiterated on, but kind of just doubled down on, added a little bit more context, a little bit better. One of them was, before they said by 2024, 25, we'll probably hope for 800,000 to maybe even close to 1 million new members. Now they said by 2025, our hope is adding close to 1 million, if not more than 1 million per quarter. So just sort of inches that bar closer to like away from more of the 800,000, more towards potentially even 1.1, something like this that they would hope for.
Did you see they increased their bonus, Tanner?
Yes, I did. Let's talk about that. So last time I checked, it wasn't on their website, but I will go because I've seen people tweet. Yeah, it's up. Okay.
Ken Megan posted about it, I believe.
Yeah, I'm just going to bring up their website. I have it right here. Whenever signing up for direct deposit through SoFi, you're going to get a big fat $300 rather than $250. instantly, what do you guys think? 4.6% now, sign up, bonus $300. Yeah.
On
What do
how
you
much?
guys think about that?
On how much?
Not on it's $300 if you put a direct deposit up to, or a minimum of $1,000 per month, I think is what it is. And then you get 4.6% on the money that you keep in savings at no cap.
It's good. I mean, they're paying a little bit higher to bring people on, but they're being able to continue to cross all these products at the same rate as they have been before. And eventually, interest rates will go down and things will be a little bit less attractive as far as putting your money in a bank. But banks tend to be sticky products. And so a lot of these folks that are, adopting SoFi as their main bank, they're going to stick around for years and years and years. And so this will pay dividends in the future. So whatever they need to do at this point, if they upped it to 350, 400, I mean, that's fine. The lower they can get people, the better, but you don't always have Taylor Swift selling your products for nothing.
Right.
Yeah, I think the good thing about this is a lot of different financial institutions offer bonuses to move money in. Not every financial institution offers a bonus for a direct deposit. So it is very incentivized for a demographic that is just starting to get in the workplace and be in a position for direct deposit. And it's going after people that are more likely to be with SoFi on a long term basis rather than people who are older that are more looking to move a larger amount of capital over, not necessarily do direct deposit, and play the game of if I move over X, I'm going to get Y, and I just have to keep a minimum balance for a year. I mean, I know people that go from financial institution to financial institution and just harvest that bonus every year,
Yeah.
just on side money. I think it's great what they're doing because I do think it's going to help attract a lot of people, and at least it puts them in the conversation that even if the person doesn't ultimately go there, at least they're in the conversation, which gives them a chance of getting that person.
Right. I think that it will bring up customer acquisition costs, but I'm pretty sure even in the Q&A is where they reiterated it, is that they don't really look to just lower customer acquisition costs. They're doing it based on what the lifetime value of that client is. So they're happy to get a client at 400 or 500. If that person means that they're going to translate into $19,000 worth of lifetime value over the course of them having a loan and a direct deposit account and lower funding. So obviously they're hungry for more deposits. And they're happy to do so.
It's the return on investment for them. They're going fishing right now. They're using that as their bait.
Tevis?
Well, yeah. So the thing that I wanted to say, because immediately it popped into my mind, was the timing around this, right? We know that these APY increases or the bonus changes, they're relatively short-lived because of how frequently those incentives change around, right? Let alone from a macro perspective, if the Fed starts, cutting, obviously the APY is going to get cut, so on and so forth. But even over the summer, we saw SoFi competing head to head with Robinhood and others in terms of their rates. And so for me, it was more of a timing thing. Management told us in the Q3 earnings call that the CAC cost, the customer acquisition cost, would rise along with stock-based compensation and a couple of other metrics. But if they're fighting so hard for profitability, my mind immediately went, why would you increase customer acquisition cost and fight for, so many more deposits just given where everything is right now? Like, what is the thought process behind that timing, given how pivotal that profitability piece is? If they could have lower customer acquisition costs, and that would mean, X million dollars more in terms of GAAP profits, what is the sort of trade-off in their mind by doing something like this?
Steve, anything to add on that?
To be honest with you, I wasn't paying attention.
Okay, I just got delivered food, so.
Well, I can add just a little piece on that. That this is one of the reasons why it's good that they, in the Q&A, that they reiterated again and again and again, every chance they can get, GAAP profitability Q4 because of issues like that. It's like, oh, if CAC keeps rising up, is that going to eat into it? But what about the fine? What about capital constraints? And they're like, we're good. we are completely good. And frankly, as far as the market's concerned, we're long-term investors. Whatever happens in quarter four happens. But as long as they post GAAP profitability, it doesn't matter if it's just a single penny. It's GAAP profitability, and that gets a whole different level of investors excited. There's like Jeremy from
Financial education, yeah.
Thank you. Yeah, he very rarely, especially since he got burned on some of these, will invest in something that is not GAAP profitable. So his class of investor will be interested in SoFi even with that single penny. So with them doing this, yeah, they're just looking long term, and I love that focus. That they're short term, they're not sacrificing the profitability. They're like, if we got it a penny or two, good enough. And they're not going to lose that. This is not a company that quarter one, quarter two, something's going to hit. They're going to get some $100 million fine. They're not Robinhood, thankfully. But no, they're fine. They're going to hold GAAP profitability and hopefully be included in the S&P 500 maybe in a couple of years here.
Well, to add on that, Roy, I think that's the crazier part to me, because reading between the lines, you can just see the executive team saying, hey, we have GAAP profitability in the bag. We can, go on the offensive by offering more incentives to people so that we can have future profits on new cohorts of users and increase our deposit amounts even more. Like, they're not playing a very defensive, conservative game to make sure that they just, edge that scale by a little bit into the black. They're saying, hey, we've got it. Like, let's press forward. That's how I read into it, to say, okay, why would they do this now? It's because they can. I don't know.
I wanted to bring up this comment a little bit ago. Ken Megan said, the more customers we get in the system before rates start falling, the better for future lending. Now, to a degree, I mean, I do agree with that. However, I do think that there will be quite a lot of demand for new deposits without a need for a sign-up bonus if companies like Robinhood start slashing their rates before SoFi does. So if we are the last large APY holder, which is what SoFi has talked about doing, not just raising their APYs to be the highest in the market, but being the one that can potentially last the longest if rates start getting cut. In that case, do we need a super high sign-up bonus if people are going to be coming just for our rate alone? I think there's a little bit of both sides to that argument. But Steve, do you have anything to add on that?
I think it's going to matter what the other financial institutions are giving on a sign-up bonus, because to some people that matters. And quite honestly, if you're spending $200 or $300 and you're going to get 5, 10, 15, 20,000 over the lifetime of them being a member, I'm fine with them putting that initial capital up as the bait, so to speak. I mean, I think it depends on the landscape. If nobody else is offering it, then it's not a big deal. But if you do have other competitors offering a sign-up bonus, people will take that into consideration. So the question becomes, do you want to get as many people as you can, or do you just want to get what you can? It becomes a different philosophy on it. And I think their goal is to have as big a footprint as they can, because it's going to give them the greatest net for cross-selling products.
I think it's one of SoFi's like best advantages, or at least what I think separates them from other fintechs, is other fintechs don't really offer sign-up bonuses very often. It's the traditional mega banks and other large banks that also offer these sign-up bonuses. And that's kind of why I like SoFi, is it's a digital bank that feels like a legacy bank in a way. So people can come and feel like there's a lot of that trust and see all the benefits, but then also realize that the awards are way higher, the fees are way lower, the speed and usability of the app is much larger. And that could be a potential way that they're getting more customers from the mega bank side than other fintechs, just because they're capturing a newer audience that might not have been, ready to go to something like a Chime or a Current or something like that, just because they seem just a little bit more childish in a way. I don't know how to explain it other than that. Tevis?
Yeah, well, interesting that Steve sort of compared it to other banks. I'm not sure if we want to pivot But I sort of posted in the private chat a couple of other topics that we can talk about that were interesting pieces of news that happened this week. One of the ones that I found was interesting was Wells Fargo announcing unforeseen costs related to their layoffs and basically saying they're going to have more layoffs in 2024 as well. Do we want to talk about this at all?
Either your mic died or you're on mute.
I was on mute. Sorry, I was eating. Sorry. Oh, yeah. You guys still didn't hear
Yeah,
what I said.
obviously we didn't hear you.
Yeah, sorry. I was reading the private chat message. I didn't hear what you actually said, Tevis. You wanted to,
Do we want to talk about the Wells Fargo news?
which is what?
I sent the link to the CNBC article. You can throw it up on screen, Tanner, if you want. But basically, the Wells Fargo CEO said that there was about $1 billion cost unforeseen in Q4 related to severance on their layoffs that they did in 2023. Wells Fargo has laid off about 5% of their staff, about 11,000 people already. And if you'll scroll down, he has some interesting quotes around how the company needs to, right there, how the company needs to have more efficiency and become more aggressive in managing their headcount. And basically, he basically said there's going to be more layoffs coming in 2024 as well. Really interesting. I think the points that were made on X were around, competition, because that's, the talk track that sort of works, but a lot of bloat, right? And we know this is the case.
Bill in the chat is saying, Tanner, the app stinks. I actually don't think so. I think that people don't like certain aspects of the investment platform. I haven't heard anyone really complain about the SoFi Money app, which is really SoFi Relay and SoFi Money are the two biggest products. People forget about that. You don't hear about anyone complaining about the SoFi personal loan side or any of the lending sides of the business. Credit cards, you don't hear any complaints. It's just the invest platform that a bunch of investors that come to this chat say, I'd rather use Robinhood. Well, that's not what the majority of people are even using at the platform. Even this is what I keep trying to tell people. It's like level one options is something that they know people are talking about, but the high majority is going to more like automated investing, ETFs, and that's why they're pushing those products out way more. We are not the majority. We are the minority.
Stick on that for a second. For the minority, how many people are actually trading options? And I ask that because I get it, Roy. I sell cover calls. I write cash secure puts. I do that stuff. But out of the people that I talk to, I'm in the super minority on that. Many people that I talk to do not do anything with options. So I'm just wondering how big of a market is that? And is that market segmented and different from everything else? And I would think that that demographic is going to use a much different product than what SoFi is geared to.
Yeah, I 100% agree with you. I think if everyone comes back and a lot of these names that we see here, and if you guys are paying $5 a month like George is to be on to get exclusive content on a channel that specifically talks about investing, you're probably in the minority. You know what I mean? Like I think people sort of take that approach of like, oh, well, this is what we're doing, and we're in this small, echo chamber of investors that all come to talk about one thing. It's like, that is not what people do. That's not the average, right?
Yeah, I just think that the whole options thing is overblown, so to speak. And that's just my perspective, because I look at the people that I talk to, and not many people are doing anything with options. I mean, this is also, and I've been investing for probably longer than most of the people that are watching or listening right now. And I got to tell you, this is something that has just caught on in the past recent years. You used to never really hear about options 3, 4, 5 years ago. And I talk to a lot of people I work with, my friends. They don't really mess with options much, if any.
Well, I do think that sorry, go ahead, Tevis.
And could this just be like a whole FinTwit thing? There are people that are more engaged with Twitter and whatnot, are they more the option grabbies? I don't think it's the traditional investor.
Well, you have to keep in mind, and I want to bring up George's comment again and sort of piggyback on that, because you have to keep in mind the time frame around Robinhood going public and that whole GameStop thing. I think that really popularized this new wave of retail investors, of this, like, everyday average Joe type of investor hitting lotto calls, and the whole Lambo or food stamps type of deal. The reason I want to bring up George's comment is because there's really two ways that you can go about it. If you're SoFi, you can be reactive in terms of looking at where the market is going and trying to latch on to that in terms of your product offerings, or you can be proactive in terms of saying, okay, well, this is our business strategy and business vision over the long term. Options, while they might be lucrative, or while they might be profitable, or while they might be supple in terms of the amount of people that use them, it's just not aligned with where our business is going, and we don't really want to hitch our wagon to that cart, because the reason is, SoFi, to George's comment, has more of that M1 trajectory, has more of that long term, has more of that cross selling, where the brokerage side of things is just one small part of their business, and Robinhood is like, that's their entire business. And I would rather have it SoFi's way, because it reduces my risk as an investor in that company, because I know that the company will not live and die by the sword of volatility in trading markets, right? They will focus on the long-term investor. And if they don't want to trade any given year, that's fine, because SoFi has them in that ecosystem where they can cross-sell them other products and cover them end to end in terms of their finances. So I do believe it's a proactive decision that SoFi is making to not focus on options actively. And what we see in the app is the result of that.
Yeah, I think they're done going head to head with Robinhood. They have to carve out their own path.
I don't think they should try to go head to head with Robinhood. I think that from the people that I have talked to that really do like Robinhood, and you guys know that I question everybody on this, why are you using Robinhood? It's a rhetorical question that I ask. Everybody just loves the platform, and they have no interest in leaving. They have no interest in going to Thinkorswim. They have no interest in going to Tasty Trade. They have no interest in going to Interactive Broker. They truly love Robinhood. You're not going to get them to switch to SoFi or to anything else, because there's already great platforms for trading and for options. I would much rather see SoFi go in the asset management direction, as I've said, build out the long-term investor, build out their suite of ETFs and add mutual funds, and because that's what is going to take them to the next level, because then they get in the 401 and 403B game in the US for long-term investors, for asset management, for being a custodial for companies for their retirement plans. They will generate a tremendous amount of capital from that. You have the perfect person, Liz Young, who's on CNBC all the time. She's smart as a whip. She does all the right podcasts for risk reversal media. She does Compound and Friends. She's on all the different things. She's respected as an economist. You can build a whole team under her and also expand and generate a true wealth management arm that goes into private equity and private individual investing. That's how you are going to win and get to a top 10 financial institution, by adding that, because then you're competing with Morgan Stanley, Goldman, Wells Fargo, JP Morgan, Merrill Lynch, Bank of America. And then you also are going to need to do business accounts. I can't stress enough how big small and medium-sized businesses are. Getting those accounts for their payroll under SoFi, like that is where they need to focus the expansion, not on options.
Well, they did talk a little bit about that in the Q&A. I don't know if, because I literally felt like they were talking directly to you. Now, let me see if I can find the quote. If I can't, I'll go off the top of my head and someone in the chat can potentially help us. But it was essentially along the lines of, how large the market is that they're going after currently. They're able to go after so many new clients, and that they won't ever need to expand their options or their offerings right now, at least for quite a long time. I honestly don't think we'll see it 2025 at the earliest.
Yeah, I would have liked them to expand on it, but you look at the Vanguard's, what is Vanguard's success? Their success is that they have arguably the best ETFs and mutual funds. You could say
Yep.
them, BlackRock, State Street, Fidelity, and Schwab. It's hard to really say who's best. They were all very good. I'm not going to discriminate. But on VOO, their expense ratio on that ETF is 0.03%. Very low. You have a ton of capital flowing into that. So you have the asset management fee on that on an annual basis. And then when that is held in a 401k or a 403b, you're also getting the asset management fee on top of that expense ratio for the fund. You double dip. It is a beautiful business venture. And that is how they're going to grow. And that's what they should be focusing on. I really hope we hear something about that. And the tech platform, we need more information about it, because that's what's going to get SoFi a much different multiple than traditional financial institutions. And they're one of the only ones that will be looked at in that light. We need to hear more about the AWS of fintech. We need to hear more about the RFPs. We need to hear what regional bank they won. And I'm sure they can't disclose certain things, but it would be nice to know when they win these things, and then when they're allowed to say who. We need to know who signed up, because that's going to be huge for getting them in the room with other companies. We just need one big financial institution under our belt, and then it's smooth sailing probably.
Before we go completely away from the Invest platform, I just wanted to say, really, I like the way that the Steve asks about Robinhood, why people actually use it. And I think that's a fair question for why anyone uses SoFi Invest. And it's not because a person is a very serious investor, because we saw today Chris Haggard ended up saying, you know what, I'm capitulating. I'm going with Robinhood. Level 1 options have not come. It's too enticing. He loves the user interface. He's already familiar with it. He's gone. And I've seen that many times. And it's not the casual degenerates that come in and throw $100 in Bitcoin or whatever, or some zero DTE option. That Robinhood gets all those as well. It's because somebody has a relationship with SoFi already. So they're either an investor, and I've seen a lot of that. That's one of the cool things about the community is we investors try out the products and usually like them, except for the Invest platform, or it's because there's an already existing banking relationship there, and it's just easy to cross sell. This is a product that I think, if I'm getting the read on it right, that SoFi was hoping would actually bring in folks that they'd be able to cross-sell from the SoFi Invest platform over to their other products. I don't think that's going to happen. It just doesn't have that pull. They can't compete with Robinhood. Well, they're not competing with Robinhood partly because they can't. Frankly, people look at Robinhood and they're like, oh, there's no moat there. It's easy to replicate a user interface. Then why has SoFi not done it? Why have other companies not done it? They can't. Robinhood continues to innovate. They're ahead in this space. SoFi, it's not going to kill them that they have just a kind of mediocre investing platform. And as far as the options, if they were saying, you know what, we're going to completely move away from that, they would have just said no to options. They would have said, we're not doing this. We're not having this. Instead, they're saying, well, we're going to have level 1 options. We're working on that. That's in progress. That's going to happen. So they're wanting to move that direction. I just think it didn't go as well as they planned and anticipated. And that happens. It's still an incredible company. It's just one of 2 products that are just kind of mediocre at SoFi. And that does not kill the bull thesis at all. It's all about the tech platform, like Steve said.
Yeah,
Right.
and think about it. Tevis, you met TJ. I'm not calling him out by any means. I like TJ a lot. The guy shows that he has a lot of money on Robinhood. He uses it all the time in his preferred platform. He's not some kid that is putting $100 in chasing a crypto or YOLOing into options. This guy is very good at what he does. He's very respected, and he does extremely well, and he posts real gains. He has no interest, from what I've asked him, about moving away from Robinhood. I mean, what he uses, I respect the hell out of it. He truly loves using Robinhood. You're not going to get people to move away if they truly love that product. He could be using anything. He could get terms with Interactive Brokers. I mean, he could get terms with a lot of these companies and probably a better rate than what they are advertising. And he's using Robinhood for a reason. The interface works for him. You're not going to get that's like it's the equivalent of getting me to drink Pepsi instead of Coca-Cola. It's not going to happen.
Yeah, I think Roy is right. It's not a mention of trying to take Robinhood customers. It's trying to get people from the money platform over to invest, right? It's one of the things that they highlighted for the Relay platform, which I thought was cool. They said, if our budgeting app works, that means we can save people money, which means they'll have more money to invest on our platform. It's like, wow, that's, if that's actually how deep they're thinking about it, and that's to a real effect, I mean, the compounding effects on having each individual product in the pie does actually compound. I mean, a lot of people, especially in this area, you guys have kind of been spoiled rotten with great tools. Here in Canada, we haven't. I cannot assume that SoFi Invest platform is worse than Wealth Simple or something like this. Does it have a buy button? Does it have a sell button? Is it free? Okay, well then you have what we have up here. So,
dude, let me just give you a parallel. I still pay fees for options trading, and I can't sell calls or puts. I can only buy.
That's
That
Yeah,
makes
terrible.
0 sense.
and the rate that you pay too is quite high. But yeah. So I would like to pivot because we have some just a little bit amount of time, and then I would like to do members only as well. So I don't know. I wanted to hear Steve on a little bit of. We should do a little macro Steve segment every week.
It's gonna be short because whatever I'm gonna say is gonna change next week.
Yeah, that's why it'll be a weekly segment.
Jobs came out today, didn't it? Payroll came out stronger. Unemployment came out lower. So all good all around, doesn't it? Like disinflation, basically.
Nothing matters right now. Next week matters. We need to see what Powell says. We need to see his tone. I mean, the guy's a stoic. His tone is going to be the same. It's more in what he says and how he says it. And I don't know that he's going to give any hints that they are going to have cuts on the table. I mean, he has not wavered one bit. We can stop right there because anything else we say is just guesses at this point. The Fed conference is in 3 trading days from now. So let's wait till next week. See what he says.
I love this. Good news is becoming good news. That's so funny, dude. That's awesome. You really have to be deep in the weeds to appreciate. Love it. Go ahead, Roy.
That was last true 2021, part of 2022, maybe not even barely 2021. I mean, it's been a while.
Can you bring up that thing from Capital Exotics, please?
This?
No, the next one down. That one. So I don't
Steve,
know about
we need tech talk for hitting huge fintech multiples, then Lambos.
So I don't know about the Lambos, but Amit and I were talking, I think yesterday, and I sent him something that I wrote probably a year ago because he said that he really hasn't heard anybody really explain the tech side to him in depth. And I said, I'm not going to be able to explain it the way that I wrote it because I wrote a lot of things about how the banking industry is running on archaic software. And I cited a lot of things from some banking institution sites. So I sent it to him to read. But I really do think that that is what is going to set us apart. And I've always said that this is a hold till 2030 for me, unless my investment thesis changes, because if you're looking at SoFi as just a financial institution, there's some excitement there, but it's not going to be the huge movement that you're going to see in some of these other names over the next 5 to 10 years. If their tech platform is what I think it is, and I'm just saying me because I truly do think with the due diligence that I've done, when you pair Galileo and Technisys together and what they are accomplishing internally and what they're looking to do externally, it could give SoFi a hybrid tech multiple. And the bigger thing besides the tech multiple is the potential for reoccurring revenue coming from their competitors to power their back end, which will diversify their revenue and profits. But it'll be expanding because those types of deals, I would expect, are going to be very similar to other SaaS deals where you sign a 5 or a 7 year agreement and your first 2 years are at the same level. And then you have fixed price escalators on an annualized basis going forward. And then after that agreement is up, there's very little chance, unless something goes very wrong, that a financial institution is going to move away from that underlying business because it's downtime, it's implementation, it's headaches, it is a nightmare. And once they get you hooked, as long as SoFi doesn't screw up, they can have a customer for life or for decades. And with all the new regulations that have been coming out and will probably be coming out, and all the new features for cybersecurity and identity theft and everything else, SoFi could be in a position where over the next 5 to 10 years, if this takes off, and if you do get a couple of big hits, they're going to be in the room with more financial institutions. They could be generating reoccurring revenue from a decent size of the banking sector, and every single financial institution has to have some type of underlying infrastructure. And you look at Truist, and I have a funny suspicion, and I'm going to speculate that Truist is the one that we signed on the regional banking. And when I say that, and after I stop talking, I'll go to their investor presentation and find the slide. They've been making strides on their digital footprint, and it kind of lines up to what the Technisys and Galileo combination would do for a company. And this is not 1980 or 1990. I'm going to date myself and Roy here, but Roy's going to remember banking 10, 15 years ago where none of this, what you had to go to a physical branch. You couldn't open an account online. Everybody has the ability to open up an account online through a phone or through a computer and never walk into a physical location. So competition is endless. So if competition is endless from a user standpoint of who we select, then that means that every other banking institution has to be front and center with technology to not just retain, but to get new clients. So these tech platforms for banking is going to be even more important. So if SoFi does become the creme de la creme, which we think they're going to be, or I think they're going to be, this could be a huge thing. And we could see a true S curve in a couple of years on what they're bringing in. So that's why I think that their tech platform is one of the most important things, because they're generating profits from somewhere that nobody else is going to compete with them. JP Morgan Chase isn't competing with them there. Wells Fargo, there's no competition from those players there. So that's huge.
Honestly, the one thing that I think is really exciting for some of these more modern solutions, like what not only what SoFi offers, but Marqeta as well, and some of these newer ones, is they already have FedNow capabilities. They've come out, they've been very loud about this. I was reading an article recently that was talking about how a lot of these banks are really seeking FedNow. It's really hot right now. Clients are wanting instant settlements and these sorts of things, but their technology is just not. It's just not a modern solution. And so they need a Technisys, for example, to sort of brighten up their company, so then they can handle 24-hour, 7-day-a-week transfers. Like, it's not 8 hours anymore. It's constant. And
Can you bring up my screen?
I will in a second. I think that FedNow might be one of the largest pushes to get legacy banks onto a newer cloud-based infrastructure than potentially any other movement. That was a government created, well, depending on if you want to call it government, but it wasn't us that actually created that. Go ahead.
No, I was just going to say that Truist is one of the largest regional banks, and Over the past year, their mobile app users has increased by 8%. Zelle transactions is up 32%. Digital transactions is up 9%. Client satisfaction is up also year over year. I mean, this goes to show you that the regionals are, or at least Truist is taking the tech side very seriously. And if they're taking it seriously, the rest of the regionals and community and thrift banks have to be taking it seriously.
Yep.
And we know that the big financial institutions are taking it seriously because of the amount of money that JP Morgan is plowing into this. So, I mean, this is real. And if SoFi can hit the home run on this, either way, and Tanner, I'm going to roast you on this again, that you did not defend SoFi on Finance Junkies the way that I would have liked to have seen you with the tech side, because SoFi issued stock at $11 or $12 to acquire Technisys. We didn't spend a dime of cash. It was all stock. So shareholders got diluted. And as a shareholder, I'm fine getting diluted for a good reason. And that was a good reason, because you know what? Even if for some reason, I don't think this is going to happen, but hypothetically, if the tech side does not pan out the way that I think it's going to pan out, they'll make the money back from the dilution from all the money that they're going to save on an annual basis over, say, 9 to 11 years. And it's going to not just on the cost savings, they'll probably make it back quicker because they'll be able to deliver so many more products so quickly compared to if they were dependent on other companies' roadmaps to do what they want to do, that deal will pay for itself in perpetuity. And this is the big reason why I really do think that this is one of the only financial institutions, I'm not going to say fintech, because this is becoming more of a financial institution, even though they are a cloud-based firm. But this is what's going to give something that's perceived as a financial institution a hybrid or a tech multiple, because they're going to be one of the only players that truly has a real tech aspect that is bringing in tremendous revenue and tremendous profits, hopefully down the line. And that's what I would love to hear more about from senior leadership, because it's one of the most under talked about and most important things to the SoFi investment case.
Yeah, I agree. Guys, before we dig into another topic, unless anyone wants to add, we only have about 3 minutes left. Maybe we can save a little bit of that PayPal chat for the for the members conversation, anything like that, the SoFi weekly after hours. And by the way, just before anyone adds to the last comments, and I won't cut Steve off, supposedly he actually wanted to say something last week, and I just turned it off. He wasn't just about to swear.
You did just turn it off. Go back to the tape. You have it recorded.
No, I said I did.
Okay.
I said
I'm
I
just
did.
making sure that you realize that.
Yeah, no. But I thought you were going to scream profanities, and I didn't like that.
Have I cursed once tonight?
No, you've been perfect. I haven't had to use my my beatbox once. Oh, I had my finger on it just in case. Okay. I just wanted to say, guys, if anyone is looking to join the membership, you can check out either on mine or Tevis's channel down below. If you're already subscribed, there should be a join button. It's $5 a month. Ladies and gentlemen, anything else to say? Or just gentlemen?
I'll say price action was interesting this week. I know that we track the fundamentals of the company as well, but almost every fintech went up by quite a bit this week. There's been a lot of good economic news that's supporting that. So it's not just speculation. There is some of that too. PayPal, didn't go up quite as much as some of the others. There's some reasons for that. We're about to discuss that. Robinhood is interesting. Look into that if you guys are looking for an interesting fintech. I'm not saying buy now. It's showing what when the narrative changes on a company, what's capable. I'm in Robinhood. I'm very bullish on it. But just look at that chart, and that's what many of these other beaten down fintechs that are near or at gap profitability that are growing immensely are capable of doing in a hurry. Once people are convinced and say, okay, yeah, there is an actual bull case here, the bear case is largely FUD.
Yeah. We were up about, I think, 4.5% this week, Monday through like the last 5 days trailing. We gave up a lot of the gains from Wednesday because we were up about 8% and we gave that back. The technical setup is really interesting, though. If anybody wants to see more details on that, you should follow Michael Rowland on X. he's posting a lot about the technical setup for SoFi. And it's looking to be similar to a lot of fintechs that are having a similar technical. I'm just laughing at Danny's comment.
Yeah.
A similar technical setup, which is bullish. It's like a reverse head and shoulders or something.
All right. Thank you guys. Really do appreciate your time. But to the members, we'll see you guys tomorrow at noon. But we're gonna go record it right now.